My personal opinion is that the conventional loan is the loan that most individuals should strive to get, should try to get, because it is the most popular, first off. And the reason it's the most popular is it's the least costly in the long term. And we'll talk about why. So, this type of loan does have several things that make it attractive to potential borrowers, one of which is low interest rates. And yes, that's going to require that you have better credit in order to get those lower interest rates, but lower interest rates nonetheless are very advantageous to borrowers. So lower interest rates, fast loan processing. When you're ready to move, you're ready to move. You don't want to have to wait and wait and wait on a loan, or your deal may fall through. So the loan processing is actually faster with the conventional loans. Then you've got diverse down payment options. Like I said, they can be as low as 3% of the home's price. Sometimes they're 5, something like that. But you don't have to have a crazy amount down. And you would have to pay the PMI if you don't have 20% down. But at the same time, you can get out of it. You can get out of the PMI and it can be automatically dropped for you with the conventional loan. And that's not the case with the FHA. That's not the case with the USDA. Those things are required. You have to refinance your way out of them. And then there's various lengths on a fixed rate mortgage ranging from 10 to 30 years. So all of these different mortgage types don't have the 10, 15, 20, 25, 30 choices that conventional loans do have. You can find conventional loans in just about any increment of 5 from 10 to 30. And so that's an advantage because you can choose your length. Obviously, we want that length to be shorter. We talked about that yesterday. But that said, you do have that flexibility to choose with the conventional loan. And then obviously reduced PMI. So the fact that we can reduce the PMI down, yeah, it's costly on the front end. It's more costly than the FHA's requirement on the PMI. But the FHA has to keep the PMI. You don't have to keep the PMI once you get over that particular loan to value hurdle. And then because conventional loans offer so much flexibility, there's still some decisions you have to make even after you choose this loan type. So you also have to consider, how much you can put down, how long you want your term to be, and how much house you can afford. Obviously, all these things that we've talked about previously. But they don't make this a bad mortgage choice for you. This is still a very good choice. And so those are some reasons why the conventional is good, but why not the others? Some of the others had some really good benefits, right? So why not the others? Well, the VA, the processing fees are high, and it's only for veterans. So first of all, being only for veterans cuts a ton of people out. And then the high processing fees actually are something that people are okay to live with sometimes because, they don't have to put, as much money down as you do with the conventional. You don't have to deal with the PMI, those types of things. And so if you don't have to do those, then you're okay with this. But those fees are so high, they do end up eating into your ability to pay your home down faster. They do cost you just as much, if not more, as the PMI on a conventional loan is going to cost you. But the restriction to just veterans is a tough thing, and it takes longer to process. It's a more complex loan. So the VA is probably not the best idea unless you don't have really great credit and you have the financial situation actually to buy a home. You're in that place in the financial action plan where you're ready to buy a home, but maybe your credit's not great and you are a vet. The VA might be your choice, but for most individuals, I would pick the conventional over the VA. Then with the FHA, it's pretty glaring why I don't like the FHA, because the FHA is for typically lower income individuals, and what they do is they make you pay for the fact that you don't seem very creditworthy. And the way they do that is through PMI not being flexible and it being for lower income individuals. So if you're already low income, you probably want your housing costs to stay low. But what the FHA does is actually, makes you pay this PMI and keep it for the life of the loan, which makes the cost of your housing more expensive than it could have been. So if you can get a conventional loan, you should. Obviously, like I said previously, you need to be in a position where you have an emergency fund and you're out of debt before you go about purchasing a home. So hopefully, even if you do have a lower income, you could qualify for a conventional if you have adequate, borrowing standards. But if you have to take out an FHA loan, it's not the worst thing in the world, but you might end up refinancing into the conventional later if it's not too costly to do so. So that's my thought on the FHA. Then the USDA income limits and rural area restrictions. So the fact that you have to keep your income under a certain amount to get this type of loan. We want to increase our incomes. We don't want to keep them down. So that's a strike against it already. And then not everybody wants to live in a rural area that would qualify for this. It's probably going to be a little more difficult to qualify for, given the fact that you do have to live in specific areas. So we don't want to fall into that. So I think if you can have the adequate income to or the adequate credit worthiness to apply for a conventional loan and get a conventional loan, that you should definitely do that over the USDA loan. And then just like investments, like I've said a couple times already in this video, anytime you get a benefit, then you're paying for that benefit. And mortgages are no different, right? So the one that offers and it's kind of a weird thing, the one that offers the least gimmicks, right? The least no down payment, low rate, no PMI, all these types of, gimmick type things. The one that offers the least of those is probably the one you want, because you're paying for all those other things. You're paying for, no PMI on the VA loan because you're paying that processing fee that's so high on the VA loan. Also with the FHA, you don't have to have as high of credit standards, but you're keeping the PMI the whole time. Or the USDA also keeping the PMI the whole time, income limits, living in rural areas, all these types of things that are just restrictions to you that you don't need. They're unnecessary restrictions. So don't give up things that are good, right, in return for having to pay for them in unnecessary amounts. Do the cost benefit analysis. See what the cost would be of these different types of mortgages for yourself. Find one that's going to be the lowest cost and the most beneficial to you over the long term. In most cases, it will be the conventional loan. So I do push you to try to get that conventional loan, even though the borrowing standards are a bit higher. But if you're out of debt, if you've got an emergency fund, if you haven't ruined your credit, then your ability to get that type of loan shouldn't be ruined, and you should be able to get that and move forward with a lot more flexibility than these other types of loans.